Bankers are expecting deal volumes to top $4 trillion this year. We've got Trump and his pro-business stance. He's going to be pushing for less regulation and lower corporate taxes. What do you make of Trump's playbook 2.0?
Trump, as far as the impact on financial markets on the global economy, he is a president that's very pro-growth, very pro-business, in fact, very pro-financial markets. So that's definitely a very positive news. So the downside, though, is that he tends to be, as a leader, erratic and unpredictable. And in particular, as he regards his trade policy, he is very much in favor of using tariff as a solution for all problems, particularly the deficit, the chronic trade deficit that he views as the solid proof that the rest of the world is ripping off USA. So that clearly will cause a lot of uncertainty. I think it's going to be exciting, not only 2025, but exciting, next 4 years.
With the dangling of tariffs, do you expect him to follow through, or do you think that his bark is bigger than his bite?
Well, I think it's quite clear already, and the markets have priced in that tariffs are going to come. It was part of his playbook as part of his first administration. It's almost a certainty it'll be part of his second administration as well. But there's actually a compounding effect beyond tariffs, which I think is very key to impact on our markets here in Asia. The first is capital flows will continue to be nervous to come back to Asia, which has been one of the biggest issues we've seen the last couple of years, particularly here in the markets in Hong Kong. Global capital has not come back because they're worried about further regulation and limitations which US companies may have to invest in China, which Chinese companies will have to invest in the US. The second has been continued high interest rates in the US markets. I think this will continue to put pressure on Asian currencies, which again will dampen macroeconomics out in this region.
What would you say is the best investment opportunity for this year?
So I think for me and for us, we would very much focus on consumer goods. Because ultimately, what sector first has liquidity in the market? The second is what stimulus is likely to come from the government and where will it eventually directly impact or indirectly impact? And that's going to be on the consumer sector. I think if you see over the past year, any stimulus that's come into the economy has resulted in modest spikes in consumption. So ultimately for us, if you want to look at the impact in 2025, the likelihood of further stimulus coming into the economy and the immediate impact that may have to economic returns and fundamentals of business has to be in the consumer sector.
I agree with Lincoln. China's middle class and the opportunity for consumer goods and services are tremendous. But I would also put more emphasis on technology. AI is the most important revolution underway. Obviously, the US is a global leader, but outside the US, China is the biggest ecosystem in terms of AI innovation and deployment, commercialization. So there are a lot of public companies, and there are some private companies like ByteDance and others who are truly leaders, not only just in this region, but around the world. If you like AI, then I would say, really look for opportunities in tech innovation space.
There are some comparisons being made with China to Japan's lost decade. And if we can talk to Fred, talk to Lincoln about other opportunities, other areas, what investment ideas do you have for people to be positioning themselves? Where can we find long-term growth?
I think there needs to be more discussion, particularly in this part of the world, about India and an understanding of what's happening in that marketplace. We've talked a lot about capital flows. I think the strongest thing supporting the Indian market at this point is the growth of domestic equity flowing into the domestic equity markets. And there's a tremendous amount of fundamental growth compounded by capital flows in the market. We talk a lot about AI, and everyone goes back to the same 2 or 3 stocks to invest in, which is somewhat obvious. But I think where you want to think about playing is, if you look at IT services in India, most of the application development around AI, most of the coding and software development around AI is coming from many Indian companies. So again, if you want to play a growth market and play a proxy for AI, that's a sector I think many parts of the world should consider focusing on more.
Lincoln, what asset classes would you be looking at?
Yeah, so for us in our business, I primarily think in India, we will look at private equity as an area of growth. In the rest of the region, we're quite actively focused on private credit, particularly in the Australia and New Zealand market. And again, another proxy to play on AI is around infrastructure, whether that's renewable energy development, data center development in Japan as well as in Southeast Asia. Again, both of these are proxies to play a rapid growing AI environment.
Fred, what about you? What ideas, factors do you consider to generate alpha? Where do you see it?
Well, so we're active in private markets, venture capital, private credit, growth equity, and buyouts. So for private banking clients and family offices, one of the proven ways of generating alpha is to have meaningful allocation towards private assets, complement to public stocks and bonds.
I think the market right now in Asia is particularly volatile. I think many people are hoping and speculating on a China recovery, but until there is a sustained stimulus by the government to drive back the consumer economy, if you're looking for alpha, I think it'll be very, very challenging to find right now in Greater China. There are better parts of Asia, particularly India and Japan, where you can get quality alpha, which I think is where we would focus in the coming next 6 to 9 months.
Fred.
I would just caution everyone, China might surprise on the upside.